Okay, well, that's essentially views across asset classes coming in. Rana Gupta is Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thanks very much for your time. Just want to start with a quick question on what's happening with China. It's a collapse. It's not a normal garden variety kind of correction. It's a collapse. So the Chinese New Year holidays are coming up, 10th to 17th. So is this liquidation ahead of that? Nobody wants to hold on, or is it more structural and permanent in that sense? What are your thoughts?
Hi, good morning. I think on our show on the past questions we have mentioned that there were two drivers of Chinese economy: export and real estate, and they are not working at the moment. So the stimulus or the incentive or whatever that is required should be a little stronger than what they have been. And this is what we anticipated, that, or rather we see that some investors, they would just want to buy the declines in the hope of those kind of incentives coming. And perhaps there was a hope that before Chinese New Year, some sort of stimulus incentives, etc., would come. I mean, to be sure, some things were announced, but I think that underwhelmed the market's expectation. So whatever buildup we had seen, expecting those kind of announcements, they were liquidated. And I think that's what had played out in the Chinese equities.
Okay, in fact, there's been abnormal market fluctuations, as the Chinese regulator called it, and they came out and tried to sort of soothe frayed nerves, but that didn't, alleviate concerns at all, right? The plunge continued, especially in the stock market there. But I wanted your thoughts on what's happening, what this means for a market like India in the medium term, because there is this narrative about money moving out of China and into India. We've seen that play out all of 2023. Do you think that's something that can continue in 2024?
It can, but I think last time our show I mentioned that the investors that would probably look at fresh money, they can also look at something like Japan, Indonesia, or some of the latter markets. India is also a contender and a pretty strong one. Now let me take a step back and see why it is so. I mean, from a very top-down perspective, from a generalist or from someone looking at the market regional basis. And this is particularly relevant because budget was presented some time back. If you look back in last 3 to 4 years, India's central fiscal deficit has come down from 9% to now projected to go to 5.1%. That's 4 percentage point fiscal contraction, but the economy is still growing at 6.5-7% real and probably 10-11% nominal. That's a pretty incredible thing, right? Fiscal is contracting and the economy is growing. Investors like those kind of combinations, and that's why I think India continues to be a pretty strong candidate among the emerging markets to receive those flows.
All right. Hi, Rana. Good morning and good to see you. When, I was looking at the Fed tracker, in terms of the probability of rate cuts. And for the March meeting, earlier the probability was close to around 50-60%. It's a short while back. That's come down to 15%. What are you factoring in terms of, Fed action? Earlier we were factoring in, I think, 4 rate cuts or thereabouts. Now it appears that it could be a little delayed. So tell us about when and quantum you're expecting.
I think more important to that, whether Fed cuts or not, to what quantum and what timing, is always will remain very difficult to predict. And that basically makes sense for someone who is betting on, let's say perhaps a meeting, 1 meeting, 2 meetings for a week or so. The more important point which I want to underline is this, that Fed has now said that they are prepared to cut rates if the need be, which means, for, let's say, when the Fed was hiking rate, the so-called the Fed put was off the table. But what is important right now is whether or not, whether in which meeting Fed will cut rates, but should the economy kind of weaken a bit, then Fed support will be there. And I think that is all the stock market needs. They need to understand that when the inflation goes down or there is some economic slowdown, the Fed will be there to provide monetary accommodation. Right now, as we speak, the data is still very strong. So I think that's exactly why March rate cut hopes are dwindled. But if I have to guess, I would say June, July will be the start of the rate cut cycle. But then again, like I said, when they cut, what quantum they cut, more important than that is that Fed is now on the watch, and they are prepared to cut rates if the economy were to slow. I think that is far more important.
All right, we'll leave it at that. There is an RBI policy as well that's coming up, so we'll have to deal with that first before the next Fed policy. Thanks a lot, Rana, for joining in and giving us your quick view. Lots of stocks in focus, by the way. The GIFT Nifty may be flat, but there will be plenty of stock action. More on that coming up in a bit.